I think we're pretty close to an ending, and here's why. What took place from basically late January, February of this year up until this last smash, couple smashes, I should say, I think the shorts are very worried.
This week's specials with Miles Franklin Precious Metal Investments. 1 ounce 2021 silver Britannias for only $3.75 over spot. 2021 silver Austrian Philharmonics for only $3.95 over spot. And 2021 silver Australian Kangaroos for only $3.95 over spot. Call us at 1-888-81-LIBERTY. That's 1-888-815-4237. Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend David Morgan from the Morgan Report. David, thank you so much for joining us today.
Elijah, always have fun with your interviews. Thank you.
Definitely. It's great to have you. And we wanted to have you on because, silver has been dropping quite a bit. It's down a lot from last week. Your perspective of where we are today, and I know you actually, before we saw this drop, you were thinking that silver could go as low as about $22. So where are we right now, and are you still expecting the $22 level?
Well, we hit the $22 level in what's called the aftermarket. The smash. I don't have the exact number. I haven't bothered to look it up. One of my members wrote me and said it hit 22.30. I'm not going to argue with that number. I'm not sure, but it did hit a 22 handle. So, and then he asked the question, is that it? And the answer is, I don't know yet. I have to look at the commitment of traders to see how much short covering was accomplished. But just as a review, we always get new people on board and some that are old hands, might take on this review. But basically what happens, it always happens in these light trading areas of the market, the Globex, where there's really not much going on. Then there's a massive amount of paper, gold or silver or both sold. There's no way that there's enough buy sides to balance it out. So the market gets these huge spike lows, I call them. And then what happens is as the other markets open up around the world, these new, the openings get immediate margin calls. So selling begets selling because someone that was on thin margin has to, meet the margin call, which means, in almost all cases, it means more currency, or in some cases you could maybe margin with, more product. You could put in, more silver, but that's very rarely done. So that selling takes place until it ends. And as that selling is taking place, the shorts, the major, short side, primarily the bullion banks and their cohorts, will buy back, which buy on that side means they have covered their short position and made money on it or made currency on it. And that game is played out year over year, month after month. So Elijah, here we go again. Nothing new under the sun. It's a repeat. I guess the one thing that, we're kind of hopeful of, and I guess I'm in that camp, is, when will be the last time? And people, a lot of them have given up hope. It's like, this will go on forever. It'll never end. I think we're pretty close to an ending, and here's why. What took place from basically late January, February of this year up until this last smash, or last couple smashes, I should say, I think the shorts are very worried. I think there was a big position probably for delivery of physical at the 28-ish level, and they had to maintain it at that level or lower. And obviously that's been accomplished now. So it will start over. The shorts will cover. It'll be advantageous to go long. They will. And let's see what happens the next time. So that's all I can really say. I guess I have to say one other thing, and that is, as corny as it may sound, the physical market does take precedence over the paper market. We've already seen that a few times in silver in the retail to wholesale spreads, which have been huge. And also, as I've mentioned many times, the palladium market is a very clear example of the physical market basically controlling the price, because there's just enough flow in the palladium market to meet the demand for catalytic converters. It's it. It's not really used in jewelry much. It really doesn't have any other function other than catalysts and catalytic converters. Yes, there's others, but they're not worth mentioning. That's the mainstay. But the point being is that physically there's only so much available. The demand for it is X and the supply is X. They match pretty closely, which means that the price is determined by the physical amount. That hasn't happened in silver except on the retail side. The problem you might say with silver, if you want to call it a problem, is that there's a mismatch because there's the commercial bars, which is the silver market, which is your 1,000-ounce, roughly 1,000-ounce bars. And then there's your retail market, which is 100-ounce bars, kilo bars, 1-ounce rounds, or government minted coins. And because those are different products, still 999 fine silver, there's no disputing that, but it's a different product chain, you get a mismatch. And that's when these premiums soar, because the demand side on the retail product is huge and the supply side really isn't meeting demand. So the way to mitigate that is with a higher premium.
The interesting thing is that premiums have been coming down, although as we've seen this price drop, we're seeing a lot of increased demand at Miles Franklin. Your perspective on the silver demand right now as we're seeing the price drop?
Yeah, I'm not going to make a lot of people happy, but I have to tell the truth the best that I know it. And I'm not going to dispute Andy. I mean, he and I go back years but on the wholesale side, talking to wholesalers, demand's dropped quite a bit. There's not a lot of selling of physical, but there's really not much buying. And that's why the premiums come down, because the retailers like Andy Scheckman, Miles Franklin, and others buy wholesale from the wholesalers, and then they make their spread and sell to the public or investors or whatever. So there has been let's say there's too much inventory in some of the wholesale. I don't know if too much is the right word. There's substantial inventory in some of the wholesalers, which means they're willing to drop their premiums to move product. I mean, basically, the silver and gold markets, are all commodities for that matter, are a flow rate. I mean, if wheat was just stockpiled and used as money in trading, of course it rots and all that stuff and it's not money, but the idea being it's used. And silver a lot more than gold is used in industry, whereas gold basically is the only one that's money from the aspect of its only use is either money or jewelry. And even jewelry in a lot of the East is money. In other words, some of these chains that men wear or necklaces or bracelets or whatever are actually used, not as much anymore with the modern banking system, but you go back a few decades and there would be, these chains, you bend off a certain amount, it'd be so many grams of gold already weighed out, and you'd use that in a transaction.
If we do see, as you mentioned before, this release of the price from manipulation, then where do you see demand going?
Well, demand will actually drive it to where it breaks the chains of manipulation. And silver's interesting. I see it increasing. Why? First of all, higher price will bring in more buyers, and the algorithms that trade these markets synthetically will see a breakout and they'll buy the breakout. And then the public will come in, and it's safe to buy at a new high, believe it or not, especially if it's a brand new high. In other words, let's just use 30 as an example, because silver hasn't been at 30 in a very, very long time. So once it hits 30 as a round number, the algorithms will go long, and the public, especially the trading mentality people, the guys that have computer screens, day traders or position traders, and they'll say, wow, 30. And they don't care that, it used to be at 24, because they don't have any real tie to real money or all the principles that I teach about, money and honest money and all of that. They care about one thing: can they make currency or can't they? And so they have a very strong chance of making currency at that level and riding it as long as it's able to be ridden. And that will cause more demand. And so some of that demand will be, demand of people that really want to hold it. Or some people don't get into it for trade. We'll say, I'm going to buy it at 30 and, I plan to sell it at 40, but, and all of a sudden, it's at 45, and it's like, I'm going to sell some, or I'm going to hold on to it, or whatever, change their mind. In other words, a lot of speculators become investors. And there's a whole story behind that. I won't go into it.
With respect to the manipulation, your perspective then, because some people have said that the shorts that we're seeing are just hedges against clients' long positions that the banks take care of. Your perspective, is that more, is what we're seeing right now more than that?
It is. I mean, I want to be fair. And, people say, well, why did the market go up? More buyers than sellers. Why did the market go down? More sellers than buyers. And then everyone wants a why. Well, it's because of interest rates, or it's because the Fed's posturing or whatever. You could say that. Everyone wants to have a reason why, but the reason why is there's more buyers or more sellers. That's the reason. And to know the why, you'd have to go on a survey, an individual, every seller. And if you really got the truth out of it, the sellers were selling because they wanted the price to go down, because the major selling, the bulk of it, the lion's share, is all done through the basic bullion banking system. And that's the truth. Now, were there legitimate hedges in there? Absolutely. Let me be fair. But was the bulk of this? Look, I mean, this is so common sense. You know it, I know it, but I'm on a roll. I want to continue. How many people that buy or own something want the lowest price possible? I mean, really, no one. But yet you get these smashes in the metals all the time. You get them in other commodities. And there's one reason for that. These short sellers have a vested interest in seeing the price go down, because if you're short, you make money on the destruction of the price mechanism. And that's okay. I really think in a free market, you should have, longs and shorts. The problem I have is it has no tie to reality. In other words, if it was a fair market, you would only be allowed to hedge as a mining company, let's say 1 year's production, or maybe 2 at the most. But you wouldn't be able to be a bank that has nothing more than other people's metal for the most part. Let me be fair, they have their own, the retail market, or excuse me, the wholesale market does have some product, but you wouldn't be able to hedge more than you owned. You wouldn't be able to hedge anything but what you had. You could, take any amount you want and call it a hedge when it's really a manipulation. Am I being clear? I hope I'm being understood here.
No, that is clear. And I think with respect to that, if that is true that we are seeing this suppression in price, I mean, that just presents subsidy, as I know, as Andy Schectman often says.
It does, and you got to look at it both sides of the coin. I mean, if you want to look at it from an objective perspective and not get your emotions involved because you bought silver at, was it 28 and you paid a very high premium because the retail demand was so high, and you paid $33 for a round or whatever, and now it's sitting at, 23 or something. I don't blame you for emotionally being upset. Look, I've been there many times. It's only in my latter years where I've just kind of like, it doesn't really affect me like it used to. Nonetheless, it doesn't excuse that there's an emotional tie. But if you look at it again objectively, it's a gift. You're getting something that you're willing to pay 33 for, and now it's 23. You pay a premium of maybe $2, so you're buying at 25. And that's why I've always taught to buy the physical, don't margin, and average in. Because if you average in and you're in a bull market, you're going to come out ahead in the long run. It gets rid of a lot of the emotion, and it teaches discipline. It's like you're not going to become, your best, physicality if you go to the gym one time. It's going to take work, it's going to take effort, and it's going to take consistency. And that's what we need in these markets, especially because that's the way to have a mindset that really helps you. Whereas, people hear the story, they understand the collapse of currencies, they get all excited, they watch, Mike Maloney's Hidden Secrets of Money. All this is valid and all of it is true, but they get that emotional tie to, oh my goodness, I have to put myself on the gold standard, and they go all in, or they buy the wrong kind, or they buy from the wrong dealer or whatever. And this happens, and then it drops. And all of a sudden, even though they're fundamentally correct in the long run, they are upset. And so that's why, dollar cost averaging is the best. Let me just say, I want to add on to that. As much as I haven't said this in a while, I have in the last few interviews, I still believe that the long-term trend cannot be manipulated. But within that trend, it certainly could be managed again and again and again. But if it could be manipulated the whole time, when gold was at $252 an ounce in 2000, they could still have it at $252 an ounce, and they don't. It's at, 1,700. And gold has gone in a compounded annual rate of return of 10% for 20 years. So it's really done its job of maintaining its mandate. What is its mandate? This is my and many others' idea about gold, is it maintains your wealth. It has. If you go to shadowstats.com, John Williams, you look at the average rate of true inflation over that same time frame is around 9%. So gold has maintained your wealth all the way up if you bought it early and held it up all the way through all the ups and downs, all the dips, all the pain of, 6-year, bear market within a secular bull market. Silver hasn't done as well, but almost. It's compounded about 9%, stayed almost even with inflation. And I still think that what everyone wants, this big euphoric parabolic move where silver goes to 100 or 200 or whatever it's going to do, and gold's at 5,000 or so, will take place. And it'll be because there are a doubling of the demand that we have now. And the demand for gold is less than 1% of the financial system right now. So to imagine it go to 2% when we just added another $4 trillion of funny money to the fictional system that we now exist in. And let me just go on that. I was asked in another interview, and I was asked about, judicious use of credit or debt. And I said, yeah, I have nothing against that idea that, I've got an idea and you've got some capital and I borrow money from you, to, make a widget, and that widget works in the marketplace and I pay you back your money with some interest, and I could go on usury later. It's not the right time. But, that was our agreement. And so I used your capital to further the productive capacity of society, and the market said, yep, you're a winner and we like it. And so everybody was better for it. So certainly, if you go back in time, going back, I don't know how far, probably 3 decades or so, we used to be able to borrow $1 as a nation state and get like $1.20 of productivity out of it. Now we borrow $5 to get $1 worth of productivity to it. So if that doesn't tell you're in trouble, I don't know what would.
I think that's so key, looking at the fundamentals once again and where we are when we're spending so much. And actually, you just recently reported on another form of spending, credit card borrowing being at an all-time high. What is your perspective on kind of consumer spending right now and credit card borrowing?
My take is maybe different than some. My take is that people are hurting very badly. And between the forbearance and this, gift money that the federal government has put out to the taxpayer may, in an ideological sense, be valid, but it's critical that people have to eat to live. And a lot of them, I think, aren't buying superfluous crap with their credit cards. They're surviving. And I think, Catherine Austin Fitts goes into this. I think it's when you've got nothing left to borrow, you can't borrow from your family, they're hurting or whatever, you do whatever source you have. And even if it's an 18 or 12% credit card, you need to eat, you're going to do it. And I think certainly not all of it, but I'm making the case that some of it, if not a lot more than most people think, has nothing to do with a flat screen TV or a new iPhone. It has everything to do with surviving. And that's unfortunate, but that is the condition you see during a collapse. During the collapse usually, I know I'm repeating, but as someone said way back, and I took their idea, and it's true, it came from Jesse Livermore, I believe, that, how did you go broke? Well, real slowly, then all of a sudden. And that's how collapses happen. They start to deteriorate. The supply chain breaks down. There's not as much foodstuffs at the store. The repairs on the roads cease. Everything just starts to degrade over time, sort of slowly. You notice it. Yeah, okay, I can get along with it. Then all of a sudden you go and the grocery store's closed.
Definitely. And what we're seeing right now is an increase in inflation. Your perspective on that, do you think that's going to be, all of a sudden, as you mentioned, that it's going to skyrocket? Or what specifically do you mean is going to happen all of a sudden that will really change the financial environment?
Perception and action. It'll be not the monetary phenomena where there's enough funny money to have started this a long time ago. It's the psychology of people seeing it and then believing it, that, gas prices are only going to go higher, food prices are only going to go higher, supply chain, I can't get my favorite, brand of X at the store anymore. They ceased making it. I've already had that happen, just as I digress for a moment, but I get a certain supplement from Amazon. They don't make it anymore. They just sent me, no more, but here's one you could substitute. And I don't want the substitute. I wanted the other one. So I digressed, but I come back. So this is the idea that we're going to have a contraction in the economy. And of course, that's taking place. But most people are not aware of it, in my strong opinion. They're still of the idea that, we've got an illness and we do this and that, and we do, follow these mandates and everything's going to be back to normal. No, it's not coming back to normal. And it's a huge disruption. It's going to continue. And as I've said in other interviews, we have to hit the bottom before we come back. And what is the bottom? And the answer is no one really knows, but it'll be worse than it is now. Worse meaning less availability of products, probably higher unemployment. I hope that's untrue, but probably disruptions throughout every asset class, including real estate, and a lot of people that were once middle class that are no longer, probably won't have the opportunity to get back into the middle class.
And we like to cover on these interviews kind of how we can take action. So in your perspective, for those, who are looking for these things to happen that are unfortunate, how can we protect ourselves against that?
Well, it's more philosophical than anything else. And of course, there's some reality to it. I mean, if you can live within your means or below your means, you're much better off. In other words, if you make $1,000 a week and you can live on $800 a week and bank the other, 200, you're in really, really good shape. But not too many people have that ability. But I understand that. But the idea is to be out of debt and say, well, if we're going to go into inflation or hyperinflation, the inflation rate will bail me out. Okay, let's think about that for a minute. So you bought a house for $200,000, 10 years have gone by, and it's now worth $750,000. You have all this currency profit. But if you go to buy another house in the same area, it's going to cost you the same. So you really haven't gained anything. Now, if you sell it and you move to a rural area and you're able to, double your property. In other words, you get a lot of land and you get maybe the same size house or maybe slightly smaller or something like that. Well, there you've made a gain. And so I won't dispute that. But what I'm trying to convey is that don't bank on the idea that inflation will bail you out. It's better to be conservative, live within your means, and then saving capital. It's really tough to say, go all in gold and silver. I don't think you should. I think you should have the ability to have cash. As bad as I trash it, the US dollar is still king of the currencies and will remain so probably until the reset. Even though it's worth 2.5 cents based on what the Federal Reserve says from the 1913 benchmark, it's still worth 2.5 cents relative to that time frame. So I would say balance. You need to balance, live within your means. And if you have anything extra, food would be number one. Food, water, and friends. The metals are important if you have extra that you can store because it's, low volume, high net worth, can be bartered, lots of things about it that are very, very important, but not as important as being able to feed yourself and your family. And I'm not a big proponent of the freeze-dried food, but I own probably a year's supply because I'm prepared. But that's expensive. You're better off buying, canned goods and storing them. You get more value for your fiat. But there's an advantage to the dry stuff from the aspect of, one 12 by 12 by 12 bucket is good for like a month. It's pretty hard to get a month's supply of canned goods. So if you got a, dash somewhere or whatever, you pick up one of those things and you're good for a month. So probably overtalked it, Elijah, but you always let me run. So reel me back in.
No, we always appreciate your insights with respect to all of that. And I guess before we let you go, are there any last thoughts you'd like to leave with our viewers, and where can our viewers find you online if they'd like to learn more?
Yeah, there is a thought. I've been, always studying, always learning. And going back into some of my library back here, dug out a book from Jerome Smith, which was the silver guru back in the last era in the 60s and 70s. Wrote a book, The Reinstitution of Money. And I'm going to be talking about that hopefully on the Greg Hunter Show, USA Watchdog. So if you don't mind me plugging another show, I get a lot of views on that channel as well as yours. As far as how to find me, themorganreport.com. If you go to the blog page, I have links to our LinkedIn and our Facebook and our YouTube, which I'm still on. I've gotten a couple strikes. I don't know how much longer I'll be there, but I've been there for a long time. So that's it. I would say get the free newsletter at themorganreport.com. If you want the subscription, you can read the sales letter. If you want the books, pull down the book tab. And, you know, my heart's still in the same place it was when I started, and that is I want to awaken and help as many people as I possibly can during these challenging times. And money is important. And unfortunately, you have to have money to live in almost all cases, unless you're, you know, in a tribal atmosphere or a Amish. Even the Amish use currency. But there's more to life than money. We certainly know that. So balance the idea. I mean, the idea that, you know, if you have enough money, you're in a good place isn't true. We're going to enter a time where money alone is going to help, but certainly not going to be your savior. Your savior is going to be relationship. And that relationship is probably more important. And it has to do with relationships in many areas. I won't go too far, Elijah, but strong relationship with yourself. And that's what an adult has. And in my opinion, there aren't too many of those left anymore. But hopefully under these stressful conditions, there'll be more and more maturity. You know, it may go back to what I said earlier about, you know, how did you become an adult? Very slowly, then all of a sudden. Why? Because the conditions required me to grow up, or otherwise I would fail. I know that might sound harsh. I know it may sound corny, but it's what I truly believe.
I think it's so key, and you often say, you know, you need to be first and foremost prepared mentally, right? And also, you know, the relationships in your life are going to be really the most important. Financials kind of after that. But David, we really appreciate all the insights you've shared with us. And before we let you go, I guess just, your website, themorganreport.com. Once again, thank you so much for your time, and God bless.
Thank you. God bless you as well, Elijah.
This week's specials with Miles Franklin Precious Metal Investments. 1 ounce 2021 silver Britannias for only $3.75 over spot. 2021 silver Austrian Philharmonics for only $3.95 over spot. And 2021 silver Australian Kangaroos for only $3.95 over spot. Call us at 1-888-81-LIBERTY. That's 1-888-815-4237.